And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family, and welcome to the Market Prep. It is Monday, April the 24th. My name is John Hoagland. Thanks for trusting me with your time. As always, we are going to be seeking accurate context, always thinking about risk management and remaining patient in our trading here. This morning, a couple of minor economic numbers already out this morning at 7:30. The Chicago Fed National Activity Index. No real response in the markets from that, and none really expected. 9:30, the Dallas Fed Manufacturing Service due out, and that's about it for today. So U.S. stock futures pretty much dead even here. Looks like maybe a little bit lower, 41 ticks lower in the Dow, the S&P and the NASDAQ very close to settlement. Starting off the week, kind of with a whimper here. It looks like. There's a lot that investors and traders are facing this week. Some major economic information due out. We know we've got the GDP number, the first look at the first quarter of this year as far as the GDP is concerned is coming out on Thursday. We also know that there's some hefty earnings due out this week. We've got the Coca-Cola beats expectations on both. Of course, that's not a really impactful one. The more impactful ones are as the week goes on. We've got Microsoft, Alphabet, and Visa tomorrow after the close. Meta or Facebook Wednesday after the close, and Amazon Thursday after the close. So we're really getting into the teeth of earnings season as we speak and into this week. Crude prices are pretty much steady as traders are dealing with a lot of uncertainty as far as the U.S. economy is concerned. And, you know, as far as the other numbers due out this week, we're pretty much through with everything today. Tomorrow, Case-Shiller Home Price Index, FHFA Home Price Index, Consumer Confidence, and new home sales all due out tomorrow. Wednesday, Durable Goods Orders, International Trade in Goods, Retail Inventories, Wholesale Inventories, and of course the EIA Petroleum Status Report all due out on Wednesday. On Thursday, that first quarter look at the GDP numbers. Thursday at 7:30 a.m. Central, along with the usual jobless claims on Thursdays. But we also have pending home sales and the EIA Natural Gas Report. Friday, Personal Income and Outlays, Employment Cost Index, Chicago PMI, Michigan Consumer Sentiment all due out on Friday. So lots of information coming at traders and investors this week. And don't forget, it's the FOMC meeting next week on Wednesday. So a lot of anticipating, hedging, and positioning will be going on over the next week and a half. We won't have the benefit of any talking Feds this week or the beginning of next week, as I believe they have a gag order prior to the FOMC meeting on Wednesday. Look through just about every calendar that I can see, and I don't see any talking Feds. And from what I understand, they're not supposed to be talking prior to the FOMC meeting anyways. So this morning, the VIX is up slightly. I mean, not really much at all, 1752. It was 1732 at this time on Friday. Dollar index is down slightly at 101.63, where it was 101.77 at this time on Friday. And the yield on the 10-year just about dead steady, although slightly lower, 3.53% this morning. Was 3.54% this time on Friday. So nothing major as far as changes going on, nothing major as far as big opportunities we're seeing here. The markets are largely range bound, some of them near important inflection levels, and we're going to take a look at all of this here very shortly. Good morning, Timothy. First in the room, you win the prize. Jay, Shaw, Brian, Scott saw, and he conquered. Damitar, Linda, Julian, Stephen, Taurus Trader, Rooster, Pete, Will, good to see everybody. John, Kevin Laffey, good to see you, sir. George, the center of the universe, is currently curled up on a rug by the front door, maybe waiting for her favorite person, my son Luke, or mom to come back in, who knows. Terry King this morning, good morning. Alejandro, Kelly Trades and More podcast, good morning. Welcome, Kelly. See, a couple of names I don't think that I've seen here before. Welcome. We're glad you're here. Henry, good morning. Travis, Data, good morning. Dr. VJ, Charles, Robert, Alfred, Jimmy Decker, Mitchie, Ola from Spain, good morning to you. Don, Dennis, Jason, Ash, good to see you this morning. Kersey, good morning. Shai T, Nastic, Marcelo, Jason, Sarah Hall, prayers and love as always to you. Shane, good morning. Kersey again, good afternoon from Europe. Good to see you. Thank you for being with us. Andy, Anissa, good morning. Raul, German, Willie, within striking distance of completing step 2 today, trying to stay smart, take good trades, not rush the goal. Good man, Willie. Remember, every day we start from zero. Start from zero. Just follow your process. It's gotten you this far. It'll get you to the finish line, which that finish line is really the starting gate. Edgar, Brett, Haggle Matters, John, Michael, Luke. Good morning, Jordan. Today is Monday. It is group coaching day at 12:30. Here's the link to register for group coaching. I don't have any emailed in questions here just yet. Our good friend, Fred Decker, is in the process of getting funded, taking a little bit of time to get his feet on the ground before he resumes in a funded account. So we're very happy for Fred. But if you do have questions that you want to make sure that we address in group coaching, you can email them to me at jhoagland@topstep.com, JHOAGLAND@topstep.com. Looking forward to another cool and hopefully helpful session in group coaching today. We do have Make Hope Money about a half hour after the end of group coaching. So I'll look forward to seeing you all there. And then, of course, the reflection at the end of the day. We are still working on making some changes and preparing for maybe even better opportunities for us to spend time in the mornings here at Top Step. We're still working on a few kinks and getting a few things set up, but we are looking forward to presenting a much broader, bigger, better broadcast for you every morning. And we hope that you enjoy it. So we are going to jump into the charts relatively quickly. The S&P is really kind of range bound and have been for a little while. We'll take a look and again, let's see if we can't put the market's inaccurate context. That's step one. And, once you get the context of the market, then you start working on your hypotheses as to what you might see in that trading day, and then address your strategies according to whichever hypothesis seems to be ringing true for that session. So, it's always a process. There's no finites in trading. There's no absolutes in trading. There's no guarantees of success or lack of success in trading. It's all in what you make of it and how you use your tools to your advantage. And of course, we know that it's a highly mental game too. So it's how are we going to pay ourselves? One of the old timers on the floor, when I walked on the floor with my badge, said, remember, you can pay yourself whatever you think you're worth. You can make what you're worth. And we're worth a lot here. We work hard at this. We deserve the good things, right? And we're going to see if we can't get closer every day to getting what we want, and that is successful, profitable trading. So here's the S&Ps. What are we looking at here? Well, we're looking at a market that is really kind of indecisive. I mean, for the last week and a half, we've got some really long shadows, some very short candle bodies, maybe not on Thursday, but back to the short candle bodies, long shadows on Friday. And, we lost 6,100 in open interest on Friday. So there's no money coming in either direction, really, in this market over the last week or so. As we get closer to some important events, the GDP on Thursday, earnings, FOMC next week. A lot of traders maybe kind of just sitting on the sidelines, waiting for something to change, waiting for something to happen before really jumping back into this market. So we know we have upside structure. We're putting in higher lows. We're putting in higher highs. We've got a little bit of ways before we're really going to be breaking that. In short time frame, we're really kind of range bound, maybe with a hint to the upside. I think our overnight low, yet last week's low, is kind of pivotal for us to stay in this upper distribution of balance. But we're right up against another area of balance here just below. So we are going to be kind of, I think, sitting and waiting for the good opportunities to come our way. I try not to go seeking trades, especially early on Mondays. We all know that I'm historically terrible on Mondays. So I'm going to be chilling. I'm going to be patient. I'm going to be waiting to find decent opportunities. And in the bigger picture, it's looking like we are really kind of short time frame controlled. So short time frame levels are levels that may be important for us to be paying attention to as the shorter time frame traders monkey this market around. All right, so what do we do here? We opened here. We got a little bit too short near last week's low. We decided we didn't like that. We're back into range, back into value, which suggests to me that I want to stay patient. We are actually just trading back to settlement. So there's very little change in the perception of value of the S&Ps, at least not right now. So I'm going to stay patient. The market last week had a big tendency to adjust overnight inventory. That's another function of short time frame control. When the market was too long here this morning, the market took us right back to range, right back to where the overnight started, and then some. But the same thing happened here. We got too short in the overnight. The market opened. We decided we didn't like those shorts anymore, and we brought price back to settlement. Here, we didn't quite finish it here. The settlement was all the way up here, but we got too short, and we brought price back into value, not quite to the settlement, not basically where the market opened. The overnight session is where the market was brought back to by those overnight shorts. We had a nice drop to the downside, but and then Friday, we opened in range and value, and we ranged in range and in value the entire session. Well, where are we now? We're in range, we're in value, maybe a little bit of change coming here. We do have, a little bit of visual up here in the fact that we have a naked point of control from last Wednesday here, last Monday night into Tuesday. We put in an overnight recent high. Well, if the market's going to be heading that direction, it's likely going to be trying to take that out. The market doesn't like when we leave recent or all-time highs or lows in the overnight session. So we'll keep an eye on those. What are we looking at to the downside? Well, last week's low right here, we rejected it in the overnight. Looks like it might be a kind of an important level to be paying attention, an area where we may find some bigger fish down here. But in the middle here, I'm going to be really patient, and I'm going to be patient anyway because historically, I'm not that good on Monday mornings. This is the TPO chart minus the overnight. That is not it. This is it. So Friday, we have a normal variation trading day, neutral as far as points of control are concerned. The market really exhibiting an area of balance. We looked below the initial balance. We looked above the initial balance. There was no range extension beyond that. The market rotated and shrank value throughout the rest of the session. Well, here's our overnight low. Here's our overnight high. Here we are, relatively close to the overnight high. A little excess on the bottom, little excess on the top. And our, again, we know that our naked point of control is up here, and that overnight high remains hanging out right up here. So, if we're looking at what we did on Friday, very balanced, very wide, prominent point of control here. And the market is using up its ability to facilitate trade in this area. It doesn't surprise me that the market may go looking for other areas to find opportunities, to find volume, to find two-sided trade. It just is difficult to try and pick where and when. Where does it start? When does it end? When does it happen? Be patient. Look for opportunities as the day goes on. What's going on in crude oil here? Okay, we had the big weekend gap 3 weeks ago. The market really kind of ranged and kind of broke back in this attempting to try and close this gap. Right? So open interest on Friday, we lost 24,000 in open interest, and some of that is still part of the expiration process for the May contract. But we did lose open interest on this pullback on Friday. A little bit of perhaps short covering. Well, short covering takes buying power away from the marketplace. Everybody in the news is talking about crude traders and investors thinking that the economy is going to come into some trouble later on this year, possibly keeping demand for crude oil down. So that's the reason we've come off these highs. At least that's what they tell us. So our overnight low, 76.72. Last week's low, 76.72. So our weekly low already is exact, and that to me is a sign of potential weakness. It's probably not going to hold. I'm giving this short time frame downside auction a C because we've been losing open interest on the way down instead of gaining open interest. Investors and traders have been getting out of positions, not getting into positions. So that's going to take a little bit of the, if you'll pardon the pun, energy out of the market. So this exact overnight low is somewhat foreboding if you think the market is going to turn around and head up to the upside. Take a look at the 30-minute chart here. So there's last week's low, the overnight low last night, recent low and overnight twice. Not really looking too strong of a low down here. No real excess. The market was willing to come back to this level. Already you can see the market was oversold. We got too short down there. We've already reconciled our overnight inventory, and it looks like we're getting into some continuation moves to the downside here. So I don't want to fight this. I'll be looking for opportunities around last week's low. And again, I'm going to stay patient. Take a look at the TPO chart here. So here's what Thursday, Friday, losing open interest, initial balance the high of the session, excess on the low, but we've now opened with a gap below that excess. The market is attempting to accept that lower pricing. Look at the poor low we had on Thursday. We are testing that poor low as we speak. If we accept below that week low, then our next obvious opportunity would be for us to check last week's low and our overnight low, which here is with the overnight. This one is with the overnight. There it is. So Thursday, Friday, overnight low. Sunday to Monday, overnight low exact. We've created a gap. If we can't close the gap, we will be checking this level, and I will be paying attention there. What else? All right, let's move on now to the NASDAQ. Daily. Range bound, almost kind of a coiling activity. We've got a little bit lower highs. We've got a little bit higher lows. It's a little bit different than the S&Ps. Medium time frame is still to the upside. Short time frame balance, short time frame control. These markets, the equities at least, seem to be looking for new information. Again, very not confident days here. Long shadows, short bodies. Again, Friday, long shadows, short bodies, inside day, an extended trading hour range here on today in the overnight from Friday's extended trading hour range. Again, is the market is saying, I don't know what to do. I don't know what I'm going to do. So you may just want to just relax a little bit and wait and see what happens. Overnight inventory already reconciled. Back to settlement, no major overnight inventory, in range, in value, stay patient. We've got a couple of kind of interesting trend lines off of this high here. We've got 2 points of contact. We got maybe 3 points of contact on this lower trend line, which should be changed. There we go. So we got a little channel going here. I'll be paying attention to the market as it gets to the extremes of this channel. And I'm going to be using basically range-bound rules. If we get up to this high, I look for a short. It lets me limit risk. If we accept outside of this, then I go with it. If we get to the lower extreme here and I buy it, I can limit risk. If it looks like it's accepting below this level, then I can go with it. But the whole idea is to think about the context. Well, we've been putting in lower highs and lower lows. Well, if that's going to hold, what are we going to do? So my hypothesis would be basically inside this channel, fade the extremes and go with accepted breakouts. I understand accepted is a subjective term, but at least these levels here give us the opportunity to limit risk. Right here, in range and value, I'm going to sit down and watch. I'm going to be real patient. What about gold? Okay, look, it's been largely balanced here since our market state break. We've got last week's low here. Our weekly kickoff lows, low and high, remain the same for gold because there's been no market state change. And if we have seen longer time frame traders against this weekly kickoff low, they've been buyers. We've seen excess on the daily charts. We've seen, I think, a little bit of excess on the TPO charts. So we're maybe getting a little too cheap here, right? And we may have that opportunity today. We don't know. But largely the market has been balanced in short time frames since the market state upside break. It wasn't a sharp move to the downside. The market fell into balance. So volume and open interest have been waffling for a couple of weeks here in gold. What I'm starting to see here is the potential for the creation of a head and shoulders formation. So, where's the trend line? Where's the neckline on this? Well, the neckline is probably going to be relatively close to the weekly kickoff low and last week's low. Here's one shoulder, here's the head, here's the shoulder. So what does that bring us down to? Well, just by measuring, eyeballing 1925, 1920 in this area would be a potential for a break below weekly kickoff low and a measuring off of the potential head and shoulders here. Take a look at the 30-minute chart. Where are we? Excess. Another test of the low on Friday here. So we tested it in the overnight. We tested it in the regular trading hours. What are we looking at as far as where we are today? Well, overnight inventory. Here's where we started. Here's where we are. No overnight inventory. Opening relatively close to value. Okay, this might be an interesting area here because it lets us limit risk against value high. But again, I have to stay patient because the market is in balance And I'm going to probably be looking for the opportunity to let these markets, many of them, if not all of them, establish early ranges and then focus on those early ranges. Take a look at the TPO chart. Excess, IB extreme, no. Low excess, low here. This is a normal variation, extreme day. A lot of sellers tried to push this market lower and we're losing open interest. Long liquidation. Long liquidation takes selling power away from the market. We've opened in range and value. Stay patient. Kind of a low excess low here. And with that previous low earlier in the week, this low isn't looking all that strong. But you gotta do what the rules say. If we're range bound, this would be the lower extreme of the range. Let's just limit risk, and acceptance below this level we would go with. Right. What about the euro? So the euro, man, this market is tough. It is just doing its best to hold this line. No close below this level. Now we're looking where we are. We're bumping up against weekly kickoff high. This could be an opportunity for us. Still holding that line overall. Open interest increased on Friday as the market attempted to accept lower, was rejected by new business with, I believe, that increase in open interest. Upside structure, again, is intact. Take a look at the 30-minute chart. Overnight inventory was long, and buyers coming in as the market opens, pushing us up to weekly kickoff high. This is an interesting area. We may go back and double check how this gets treated in the next 5 or 10 minutes while we're still in this meeting here. Here's the TPO chart. Excess low, excess low, excess low. Weak lows though, but always with the excess on those weak lows. We've got a gap to the upside. We're trading in the direction of the gap, and if we can't fill the gap relatively early, which we've failed to do, and now we're up against that weekly kickoff high. What about the 10-year? So I've left the weekly kickoff levels the same here in the 10-year, even though we had this look down below. We even closed below it one day, but we had some pretty good participation, or at least some open interest, buying it off that level on Thursday. A little bit of a pullback on Friday. This rejection last week of weekly kickoff low, it's supportive, at least. This is all excess down here. We've kind of established a short time frame balance area. The weekly kickoff high is the high of that area of balance. So I'll be focused on that level as we go through the trading day today. Overnight inventory a little bit long. So far, they seem to be continuing to get paid, although momentum has stalled. There is a kind of a double distribution trend day here on Friday that we've opened in the middle of. Take a look at the TPO chart. Here it is. Double distribution trend day. The market opened between the assumed points of control from each distribution of time and volume on Friday. Looks like we're going to be trying to test this point of control first. If we can't see continuation to the upside, there's an opportunity for us to bring price back down to the assumed point of control in the lower distribution. Now, are these big opportunities? Not really. I mean, we're looking at, at 15 ticks. What are we risking? Think twice. Let the extremes establish themselves. If you're trading natural gas, you should move to the June contract. Range bound, balance, indecision. That's what it looks like to me here We lost 16,000 in open interest on Friday, and then, of course, is blurry because of open interest, because of rollover, I should say. What about the 30? Inside range, inside value, no overnight inventory. Be patient. Let the extremes establish themselves and then focus on those extremes. Here's the TPO chart. If I can find it, there it is. So low excess on both sides here on Friday. Just a very range-bound, two-sided trade, normal variation day. We're still in it. Be patient. Change is coming. And that's what this whole thing is about, is change, right? No IB on either side is the extreme of the regular trading hour session. Stay patient, man. All of these markets, especially, on Monday, are kind of saying, there's opportunity in the wings here. Just be patient and wait for the right opportunity. As Joe was saying, it's all about context, and it's all about context for all of us. If we can identify accurate context, the market kind of gives us a roadmap to trade it successfully. And, that's that first step, is that context. So I mentioned last week, every week is like another chapter in this year's trading book. Every day is another page. So Mondays, I know that I'm typically not the best trader, and I'm seeing things the best on Mondays because it's the beginning of the chapter. You got to get things set up. You got to see how the markets are acting, responding. You can set up your hypotheses. You can make assumptions on the context of the market. But when it comes down to it on Mondays, you don't have a lot of information. Things could have changed over the weekend. Doesn't look much like things changed over the weekend here, but we're just going to take our time and make sure you get started off on the right foot. If you are getting close to a goal, don't focus on that. Focus on the process. Focus on finding good opportunities. You start to focus on that goal, that gold ring or whatever it is, then you start stepping away from your process and your strategies, and you just start grabbing at straws to help you get to where you want to go. And that usually ends up with poor results, at least from where I've been sitting for the last 30 years. Whenever I have a financial or time-based goal, things go the opposite way. So just take your time, start every day from zero. All right. We are going to take our deep breath. Stay humble, grateful, creative, and centered in your trading today. Looking forward to seeing everybody for group coaching, Make Hope Money, and the reflection. And trade well today, man. Just take it easy. Try and get off on the right foot. Happy traders make better traders. Let's trade happy. Be kind to yourself, be kind to others. Have a great session. And I'll see you later. Have a good day.